Hello, today is the 16th of January 2021. As always, we'll start with our disclaimer, go over our calls, and then make our predictions for next week. This is the rules of my channel. Please remember that I'm just predicting what will happen on Tuesday, and anything beyond that is less accurate. There's no guarantee anything I say is going to be right, so trade at your own risk. And my email is mejt.trades@gmail.com. Let's review what we said before. This was our call. This is my predictions for the patterns for next week. We had a target of 3790.46 on the 12th of January, and that printed, so we take it off the list. We had a target of 3818.66 from the 14th of January. That didn't print, so we add it to the list. Remember that if this is a major change in trend, which isn't confirmed at this time, that MEJT likes to leave failed targets. Looked for the pattern with the early high. This is it. When the market reopens on Tuesday, we'll also have the early high. During the day, MEJT gave a weak signal to buy. In the afternoon, a buy signal just means just a target at the higher price, and there's resistance over it. The target printed immediately, so it wasn't actionable. There's no guarantee that resistance was going to hold, even though it did. We gapped down, which is what we called for. We said the commonest thing was a gap and prompt move outside of Thursday's range. We got that. Looked for the pattern with the early high. We got that. We gapped down, hit lower lows, and closed over these early lows. It's basically a positive pattern. When you have it, you either take these lows out early or else you see higher prices. Doesn't mean that you'll close higher. Well, this was the pattern that called for a possible top on Thursday of last week. We never invalidated the pattern, so it still remains alive, but until you take out some prior lows, it isn't confirmed. I had been drawing a line connecting prior lows here. There's no reason you can't draw a parallel through this low. So we still don't have the break of the lows we need to confirm the pattern. Now if we break, that's an if we break down here by gapping under this line and keep dropping, there's a long way down. But until that happens, it's not the only way I can read the pattern. Well, here's my diamond on stilts pattern. Here's the left stilt. Here's the right stilt. Here's your diamond, pretty clear. The origin of the left stilt is a support resistance area. And the majority of the time, the first challenge, which is now, holds as support. And the fact that the gap is left unfilled from here greatly increases the chances it'll break at some time. So at some time we look for this, any rally from here to fail. And if it takes a few days, not just a day or two, if it takes a few days to break through here, it should drop pretty much in a straight line. Same thing goes for this gap here. At some time it should fill and we should overtake this high, but it doesn't preclude dropping a lot more first. So if this holds, normally you'll get a rally of some kind, but this is a support resistance area, and if we gap and take out this low, and preferably this one, this tends to hold as resistance. Tuesday's pattern has the early high. We could get down. We gapped down, hit a lower low. We closed over the early lows. We're also at support from a diamond on stilts pattern. You can see that this is a Fibonacci target of part of the diamond. We had a sharp sell-off after the close on Friday. Usually that represents panic selling by the amateurs and is met by gapping up smartly when the market reopens. So the vast majority of time, we should gap up smartly Monday. But if we don't, it's big trouble. If you gap and promptly undercut Friday's low, if that happens, it would represent failure of support. We need only confirmation by subsequent trading to indicate the start of a major drop. It isn't impossible, and such an occurrence would likely be clear, telegraphed before Tuesday's open. Probably the last time you're going to see institutions selling en masse at any price is late on Friday, right before a 3-day weekend, when they know liquidity is drying up. I mean, they like to trade when there's liquidity so they can get the best possible prices for their positions. So when you see panic sell-off on a Friday like that, usually it's the institutions or professionals who have to buy, and usually, not always, they get their money back very promptly by gapping up smartly, maybe even over this high, but it's not guaranteed. We'll have to wait to see how we open. But in general, I view this as support holding for now. If it fails, it should be pretty obvious early on. Tuesday's pattern has the early high. Most of the time support holds. If it fails in grand style. And that's today's call.